Hello, everybody. I have been receiving this question rather frequently here in August on how to fill out a W-4 form for a couple filing as married filing jointly. What I've been seeing is that couples are getting married and filling out the form incorrectly, which is resulting in them owing the IRS. If you're new to me, before we get into this, my name is Timalyn Bowens, and I am America's favorite EA. As an enrolled agent, I'm licensed through the Internal Revenue Service, not only to do tax preparation and planning, but also representation. So I work with clients literally daily to help them resolve their IRS tax issues, and I represent them so they never have to talk to the IRS themselves again about that tax issue. Now, the reason I do this is because I'm on a personal mission to fill the tax literacy gap, which is exactly why, when asked, I'm doing this video for my married couples filing jointly because 1 in 50 taxpayers owe the IRS, some of them for simple reasons such as not having this form filled out right. So in today's video, I'm going to show you how to fill this form out appropriately to make sure that you don't owe when you go to file this next year. Okay, so this is your Form W-4. If you have ever worked for anyone as an employer, you have to fill this out in your new hire packet. What the W-4 does, it tells your employer or your employer's payroll company anyway, how much you need to have withheld from your taxes each pay period to make sure that you have the right amount paid in at the end of the tax year. So step one, most people get this part correct. Let's say we have grade A taxpayer, okay? Then their address, they live at 123 Anywhere Road, all right? I'm in Louisville, Kentucky, so I'm going to put them in Louisville, Kentucky with me. And their social security number, let's just make up one for illustration purposes. All right, now when you're filling this out, you want to make sure that you have your name exactly the way that it is on your social security card, because when your employer files your W-2 at the end of the year, a copy of it is going to also go to the Social Security office. So your tax return, any tax documents have to match what the Social Security office has on file. So we're going to go to the next part. We're doing married filing jointly. And if you're recently married, doing this for the first time, first of all, congratulations. Second of all, congratulations, checking this video out so you know how to do this correctly from the get-go. Now, if you've been married for a while and you tend to owe because you don't have this filed correctly, no worries at all. This is a brand new start. We're going to wipe the slate clean. So next we'll see, it says complete steps 2 through 4 only if they apply to you. If you're married filing jointly, this is going to apply to you because we see right here, complete the step if you are married filing jointly and your spouse also works. Now, if you only work one job and your spouse doesn't work, let me rephrase. And your spouse doesn't work outside of the home in some capacity other than a homemaker, then you're pretty much good to go with just filing, just filling out this first sheet. But where couples tend to make a mistake is they only fill out this first page. And I'm going to show you the additional worksheets that are actually provided to help you make sure that you don't owe at the end of the year. So you only need to do one of the following. A, you can use the estimator at www.irs.gov/W4app. I'm not going to go over that today. However, if you'd like for me to do a video on that, let me know down in the comments and I can get that done for you guys. B, Use the multiple jobs worksheet on page 3 and enter the result in 4C. That's what we're going to focus on today. But the other option is if there are only 2 jobs total, you may check this box. Do the same on the W-4 for the other job. This option is accurate for jobs with similar pay. Otherwise, more tax than necessary may be withheld. So for example, if we have a couple and both spouses make $40,000, you would just need to fill out step 1, check this box here, and then sign at the bottom. But in this example on today, we're going to actually have a couple, they make not too drastic, but the wages are different. So let's get to that. Now, pro tip here, you can go do the withholding calculator even if you were not self-employed, but to get this very accurate, if you or your spouse have self-employment income, such as being an independent contractor, so you receive a 1099, you need to use the estimator. That's going to help you get the most accurate withholding amount because then it's going to factor in your additional self-employment tax, which is self-employed people's share of Social Security and Medicare. So in today's example, we're not dealing with any children. Again, if that's something you want me to cover in another video, just let me know and we can do that. So step 4, we need to figure out what this extra withholding needs to be. You might be like, but what? I thought there were benefits to filing jointly. There are. You get to be in better tax brackets the lower your income is. However, I'm going to show you guys what happens. Here on page 2, we're going to scroll by. Now there are written out directions here that show you, or not show you, but they tell you what I'm getting ready to show you. If you would prefer to read through those, by all means, you can stop here and do that. Or if you prefer to read it, I actually did a blog post on this exact same subject matter. You can go to, let me X this out from my previous example. You can go to www.bowenstaxsolutions.com and Tax Tips with Timalyn will show you that blog post, how to properly fill out your W-4. Okay. So again, if you like actually reading the instructions, you can go check that blog post out, and there are pictures to help you along the way as well. So here we have step 2B, multiple jobs worksheet. We're going to be here. Number 1, 2 jobs. If you have 2 jobs or you're married filing jointly and you and your spouse each have 1 job, find the amount from the appropriate table on page 4. Using the higher paying job row and the lower paying job column, and find the value at the intersection of the 2 household salaries and enter that value on line 1. Then skip to line 3. So we're going to go right to, oops, sorry about that, page 4 here. So let's say that we have great taxpayer, for this example, is the first spouse, and they are married to bad taxpayer. Okay. So with great taxpayer makes about $85,000. And just in case you get confused too, this is going to be a column. This is going to be a row. So our columns hold the building up. The rows are what people sit in. Okay. So we're going to go down here and we're going to find $85,000. Now you'll notice there is no $85,000 exactly. So since it falls in between the range of 80,000 and 99,999, we're going to stop right here. All right. So we know we're going to be somewhere in this row here. So grade A taxpayer is married to bad taxpayer. This has nothing to do with their income amounts. I was just doing taxpayer A, taxpayer B, but bad taxpayer, they make $70,000. So I joke with my clients about this. This is why you had to learn algebra in high school, so you would know how to fill out your W-4. So we go over until we get to the 70,000. So we have this here, 70,000 to $79,999. And we have 10,340. So that is the number that we want to take back up here to our worksheet. And you may be thinking $10,340. Yes, that's how much additional money you need withheld for taxes. And let me tell you why. So for 2021, the tax year that we are living in right now, that we're going to file next year, the standard deduction for married couples filing jointly is $25,100. If we look at great taxpayer and we apply the standard deduction, we're still going to be in the 12% tax bracket. Okay. Awesome. So he turns in his W-4, or let me make it gender neutral. Great taxpayer turns in their W-4 form. Their employer isn't going to really start withholding taxes until that $25,100, which is the standard deduction. Okay. Then we have bad taxpayer. Bad taxpayer, if we apply the standard deduction to their salary of $70,000 only, they're going to be in the 12% tax bracket still. Awesome. So their employer doesn't really start withholding taxes until $25,100. But what happens when we combine their income? Okay, so we have that 85 plus that 70 now. Now, before applying the standard deduction, we're looking at them jumping up to the 22% tax bracket. And this is the part that trips up my married filing jointly couples. If you don't have the additional money withheld, your W-4 for your employer is not taking into account your spouse's additional income. And this is why you end up owing every year. So to make sure that we have enough withheld for the right tax bracket for great taxpayer and bad taxpayer, we need at least $10,340 additional withheld. Now, there will be things that we can factor in, like if they have deferred compensation, whether that be through a traditional 401k or some other kind of plan. But for the purpose of this example, we're just going to say it's a straight 85 and a straight 70. Okay. So once we go down to line 3, we need to enter the number of pay periods per year for the highest paying job. So we need to look at if you get paid monthly, then we'd have 12. If you get paid every other week, like most people do, it would be 26. If it's weekly, we want to look at 52. Now, let me stop you here. Before you divide that by 26, remember, if you're not at the beginning of the year, you need to not put 26 if you want to make sure that you've withheld enough for this year. What you want to do, if you have been working this job for the whole year, it's going to be different if you work more than one job during the year. If you've been working this job for the entire year, you want to look at how many pay periods we have left. Okay. So right now, today, it's August 9th. So let's say you haven't been paid yet this month. So for August, we're going to have 2 pay periods. September is going to give us 2 more to make 4. October, 2 more to make 6. November, 2 more to make 8. December, 2 more to make 10. So we have 10 pay periods left for the year. We're going to take this 10,340 and divide it by 10 to get 1,034. That's how much additional needs to be withheld each pay period. So let me clarify here. This additional $1,034 is going to be a joint team effort. Now, you see here, the IRS recommends that the additional money come from the taxpayer who makes the most. With this being a team effort, what I've seen some people do is they divide this amongst the two taxpayers, meaning instead of great taxpayer having an additional $1,034 withheld each month, they're going to split it with bad taxpayer, and they're both going to have an additional $517 withheld each month. Now, also keep in mind, I tell my clients to make sure they update this each year to adjust for any tax changes. Because they have this at such a high rate, when January rolls around, they'll want to make sure if their pay stays within those same ranges, they have this $10,340 and divide it by 26, not 10, and then turn that back in. So whatever works for your money situation and your family, you all can do half and half. You guys can do 20/80, or one taxpayer can take the full amount. Now, if you're doing this because one spouse has just now started working, I typically say the spouse that has started working to have them take the full amount, because usually their income isn't already factored into the budget. But that's just my 2 cents. So if we have great taxpayer having all of it withheld, that extra amount is going to go right here, the $1,034. If we have both taxpayers splitting it, it's going to be 517, because remember, that's half of it. So going back up here, we have great taxpayer. They have this filled out. They have checked married filing jointly. The additional amount that they want withheld each period is going to be $517. Similar to that, their spouse, bad taxpayer, is going to have the same thing, with the exception that the first name and middle initial are going to be different, as well as the social security number. And then this is going to be the same. Okay. So once this is completed, you don't have to worry about this. Your employer will have this part filled out. You just need to sign and make sure you've turned it into HR. Now, I hope that was easy breezy. Like I said, if you prefer written instruction, you can go to my blog that is on my business website. So at Bowens Tax Solutions, we specialize in resolving taxpayers' IRS issues. So if you currently have an IRS debt that you just can't seem to get on top of, you haven't been able to afford payments, I would love, love, love more than anything if you would schedule a call to see how we can help you. If we have that call and you're a good fit, I would absolutely love to step in your shoes and handle your IRS situation for you. But here's the thing, if you're not a good fit, I'll let you know without taking your money. Also, if you could benefit for something that is more cost efficient, let's say you have a tax debt that's under $10,000, I will actually show you a way that you can do that as well in either my upcoming ebook, or you can schedule a paid 30-minute call with me. So again, I hope this helped. 1 in 50 people owe the IRS. Like I stated before, my personal mission is to fill the tax literacy gap. So if you know people that work, please like this video, share this video. I can promise you somebody in your circle needs it. And if you want to stay up to date with more tax relief information, subscribe to my YouTube page, Timalyn Bowens EA. You can follow me on Instagram at Timalyn S. Bowens, and you can subscribe to the blog Tax Tips with Timalyn at www.bowenstaxsolutions.com/tax tips with Timalyn. If you have any questions at all about this video, let me know down in the comments.